would request Shri Vijay Mahajan ji to elaborate on this topic and to guide all our participants today on his long journey in the development sector, particularly in terms of, you can say, helping people uh, who really need financial support, and how microfinance can be a tool, and how informal financing has played a role in India, and particularly in the informal sector of Indian economy. Sri Vijay Mahajan ji. Ji sir.
Thank you, Kuldeep bhai. I think we need to put this topic in the context of the time we are in, because we've had even before COVID, we've had this issue of, in fact, right since say 2000, we've had this issue of what was called jobless growth. So while we had a high growth rate in the GDP, during the first 10, 12 years of this decade, and it slowed down, but even now it is moderately high, except this last year. The fact is that the job growth rate was nowhere near what was needed. Forget about what could take care of the residual unemployment. So even the incremental, the addition to the workforce every year was not getting absorbed. So as a result, we have ended up this 2 decades with roughly, about 47 crore total workers. I'm talking in terms of crores. It's easier to smaller number instead of millions. 47 crore workers, of which roughly 3.5 to 4 crores are unemployed, depending on how you measure and so forth. And so the total workforce is 47, but only 43 crores are actually working. Of the 43 crores who work, almost 50%, little more than that, are self-employed. So they are self-employed doing what? They are self-employed essentially either on their farms. So we have nearly 9.5 crore farmers, or we have people who are working in their usually micro enterprises, and there were about 7 crore of those. So, and in each of those farms and micro enterprises, the average employment was more than one. So totally about 21, 22 crore people were working in those two areas. So now the question is that whatever we do with the Indian economy, and a lot is being done to modernize and to grow in various sectors and so forth, but the results of that will take more than a decade, maybe 2 decades. And therefore, these two realities of Indian employment, one, that half of our workers are self-employed, and the second, that nearly half, now 45% of our workers are in the agriculture and allied sector. Of that, not everybody is a farmer, because farmers are those who own land, cultivators, but there are others who depend on agriculture for work. So the issue is, if this reality will, of course, this reality needs to change over a period of time. For example, China managed to move nearly 10 crore people from agriculture to small scale, what they call township and village enterprises, TVEs. In the period 1989 to 1999, China managed to move 10 crore people from agriculture to TVEs, but not from the village to cities. In fact, they had a slogan during Deng Xiaoping's time, which was, leave the farm but not the village. That basically summarized their policy. And they facilitated that transition by creating a large number of TVEs, township and village enterprises. Of course, in China, since everything at that time was state owned, so they were able to do that, and they were able to do that in a much more concerted way. But we are still, they did this in 79 to 89. We are in that sense 30 years behind, and we still need to make that transition. So agriculture to non-farm, that's the first transition. The second transition is, even if it happens, it will be largely self-employment. There are just not enough jobs in the economy. By that I mean salaried or regular wage employment jobs for all the increment to the labor force to be employed. So, in other words, if you put all this data together, the summary is that the growth path for the Indian economy, which will ensure both high GDP growth rate as well as high employment growth rate, is rural and semi-rural, small town, non-farm, self-employment. So, small town, non-farm, self-employment. Uh, in these three words, I'm talking of the sector, which is non-farm. I'm talking of the nature of employment, which is self-employment. And I'm talking of the location, which will necessarily have to move from pure rural, which is basically habitations of less than 5,000 population, to small town. We have already about 5,000 census towns in the country, and maybe 2021 census will raise the number to 6 or 7,000. Those should be the growth centers, not our metros, and villages, unfortunately, cannot be the growth center for non-farm activity due to economies of scale and other issues. So if this is so, then the question is, what does microfinance have to do with all this? The answer is that unlike China, where jobs got created in state-owned, multi-level state-owned township and village enterprises in the non-farm sector, in our case, these would have to be done by private micro entrepreneurs. Now, if you are unemployed and you want to become a private micro entrepreneur, you would need some access to capital. And, that is going to be the ruling constraint. So, if that access to capital cannot come from your family or your friends, then where will it come from? It will have to come from financial institutions. And in my second intervention, particularly taking advantage of Professor Vaidyanathan's presence here, I would like to suggest a new way of financing, but not right now. Right now, I'll just like to stop by saying that microfinance is therefore the not such an important thing as far as the financial sector is concerned. It's important for the most important national goal that we have, which is to ensure high GDP growth with high level of job growth, a jobful growth. And some people also call it inclusive growth. We need that. We very badly need that. It will solve a lot of our problems, the problems of poverty, of lack of access to health and education. Once people have incomes, they can buy a lot of these services. So, therefore, in this first round, I'd like to stop by saying, for me, and the reason I've invested all about 30 years of my life in working in the microfinance sector has nothing to do with finance. It has to do with promoting livelihoods for a large number of Indians. And those livelihoods, as I said, today have to be in the small town, self-employment, non-farm sector. Let me re-articulate some of the things you said very briefly. One is, you said that we have to use the informal sector to reach the informal sector, the informal financial sector to reach the informal micro enterprise sector. And I totally agree with you. And when I started basics in 1990s, we tried a number of those channels, and we had a very good experience. Subsequently, as our lenders, financial institutions realized that we were doing that, they came down heavily on us, and we had to stop, and we had to replace it with our own more expensive system, you know. But for example, when we started, we were working in Raichur district, and we took an office in the Mandi of Raichur, and we were working through Aartis to lend to small and marginal farmers, and it worked very well. You know, both in terms of outreach, in terms of repayment, in terms of additional liquidity for the Aartis. You know, it's a misconception that the average Aarti is a very big man. You know, if he was such a big man, he'd become a mill owner, then he'd become a landlord. None of that. You know, for 3 generations, they remain Aartis. You know, so they make a living. You know, similarly, there's a misconception that money lenders are big exploiters and this and that. There may be an occasional story which is correct, but by and large, if you look at the intergenerational history of money lenders, you know, even after 3 generations in money lending, it's not as if they become enormously rich people. So it's just another profession, and they are managing with whatever little capital they have. So even supplementing their capital through additional refinance, as you argued, is I think worth trying. Indeed, the RBI had set up a working group on this, and it had given a kind of an ambiguous report saying yes, it has some pluses and some minuses, so nothing much was done about it. Uh, the the second point you made, which is extremely important, is to cut down the application of regulations to uh, you know entities below a certain size. Now, you know, so while I'm not saying that we should remove all regulations, but I'm saying let's just have a simple law saying that any regulation in this law will not apply to an enterprise which employs only the person himself or his and her family members. That itself will take care of 86% of our 7 crore enterprises. Okay. And those are the ones who have the most trouble in terms of, you know, filling these forms and so forth. Uh, so I think it's very important that we have a more nuanced view about regulation. I'm not against regulation. I think for a healthy economy, particularly which is becoming part of a global economy, regulation is necessary as transactions happen between people who don't know each other. But any regulation uh, should not apply with equal intensity to transactions of all size. So if somebody has a turnover of less than say 1 lakh a month or has only less than 5 employees, you know, all these combinations should mean that no tax, no regulation, just pay a simple, like in case of GST now it has been done. There's a simplified way of filing the returns and calculating the tax. But that should have been done, thought of right at the beginning, rather than creating so much unhappiness for millions of people trying to struggle to fill up computerized forms and not succeeding and then feeling like defaulters and so forth. So the third point you made was that don't worry about high NPAs in this micro sector. And once again, there is enough data now for the last, at least last 10 years, because the credit bureaus have started, you know, keeping data on microfinance borrowers, on millions of them. And the if you do a detailed analysis, you'll find that the NPA levels of microfinance borrowers are far lower than any other category. It's a very secure asset class, you know, and the few times when it has flared up is whenever there has been some politically motivated interference in microfinance. For example, what happened in Andhra Pradesh in 2010, 2011, or you know, a few other cases, or when there was a serious natural calamity, you know, for example, floods in Assam and so forth. But even in those cases, after 2 or 3 months, you know, the repayment rates come back. I mean, you can imagine after the pandemic, when there was nearly zero repayment in April and May, by June it had started going up. And now almost all MFIs are reporting repayment rates in the excess of 90%. So it just shows that poor people, uh, uh, for them to maintain their credit worthiness is very, very important. And they will do their best to maintain their credit history. So all these 3 points, I totally agree with you, Professor Vaidyanathan. Uh, the one point which I heard you say more than once is that let us set up a Mudra bank and let us do this through the Mudra bank. I mean, the refinancing of these people. Now, if the Mudra bank is going to be another public sector bank, which you yourself described in graphic detail why they don't work, you know, then I think we have a problem. But if we could come up with a way by which the Mudra Bank does not have the ethos of a public sector bank, but does have the backing to some extent of the public sector in terms because it's fulfilling a social or economic purpose, that is fine. And one solution could be to use, there are already, I think, 10 or 12 small finance banks. And to ensure that there are many more, maybe there should be, at least 35, 40 small finance banks in the country, roughly one per state, and, more than one in the bigger states. And let the SFBs play this role. Uh, when the small finance bank regulation was brought in, they were supposed to not lend beyond a certain size of loan. Since then, that regulation has been changed, and now they're supposed to lend only 25% of the portfolio is for loans below 25 lakhs. I think that is a mistake. The whole purpose of creating SFBs was they could focus on the asset class of below 10 lakh loans, what are called the Mudra loans, the PMMY, the Pradhan Mantri Mudra Yojana loans. Another thing, Professor Vaidyanathan, you may have seen that, the Labour Bureau did a survey of about almost 1 lakh borrowers of Mudra in 2018. And there's a very good report available. One very interesting thing that is visible from that report is that if we divide these, like in Mudra, there are three classes, below 50,000 is the Shishu, then there is Tarun, then there is Kishore. So 51,000 to 5 lakh is Tarun, then Kishore. So the employment generated is per enterprise and also per lakh of rupees is higher for the next two categories. So while micro enterprise is of the lowest category, which is basically self-employment with myself and maybe one family member part-time, no hired worker, while that is a good solution for subsistence, it is not a job creating solution. And so we have to find a way where our banks get encouraged to do these loans between the sweet spot is between 2 lakh to 20 lakh. And I've recently given a note. In fact, I'll send it to you after this workshop, after this webinar, Kuldeep, where I've suggested that there should be, some changes, some tweaking to the Mudra loan categories. And there should be, some slightly higher level of loans available. And a greater percentage of the Mudra loans, almost 24 lakh crore has been given under Mudra over the last 5 years. But, a very large part of that has gone to the smallest of the enterprises, that is the Shishu category. Now, while that is fine in terms of number of enterprises, but as we said, right now the need of the hour is jobs. And own account enterprises don't generate jobs for anybody else. They barely generate subsistence jobs for the person who is running the enterprise. So this was my second point. The third is the which I had alluded to earlier. And Professor Vaidyanathan, I'd really appreciate your views on this particular suggestion because it's slightly technical. Uh, you know, see, we need a large number of new enterprises to come up, right? And if new enterprise by definition means startup, whether it's a micro startup or a mega startup, but it's a startup. And round the world, we know that the success rates of startups rarely exceed 30 to 40% under the best of circumstances. You know, so if we want 1 crore enterprises to come up, each generating, say, 5 jobs, for 5 crore jobs, then we will have to promote 3 crore enterprises and sadly see 2 crore out of them fail. So the question is, as a nation, do we have the ability to deal with that failure at a systemic level? Or will we immediately say, no, 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 bank chairman resign, finance minister resign, ye ghapla ho gaya, ye ho gaya. No, we have to learn, we must know that, when there is a large number of startups, there will be some failure. Maybe instead of 30% success, it may go up to 40%, but it will never be 100%. But what is its financial implication? If the failure rate is going to be is 2/3, then no lender can ever break even at any conceivable interest rate. If 66% of the money that you're given is going to sink, then your lending rate will have to be at least 75% for you to break even. And that is not going to be acceptable to anybody. So then what is the solution? And my solution is that this has to be financed through micro equity venture capital. In common parlance, we call it partnership finance. When somebody wants to start a business and we know him, we say, "Acha bhaiya, I'll give you some money, and you run the shop, and then we'll share the profit. And of course, if there's a loss, I share the risk also. So it's profit sharing as well as loss sharing, called partnership finance. But in a more sophisticated financial sense, it can be called micro equity venture capital. What is missing in India is a regulatory framework to make this happen. In fact, right now we have a very peculiar law, Professor Vaidyanathan, which disables people from giving a loan to anybody other than their relatives or putting the money in a bank. If I know Professor Vaidyanathan and I think he's going to start a small enterprise and he's just a friend of mine, but not my relative as defined in the law, then my giving you the loan is illegal for you because it amounts to your taking a public deposit. And this is, I think, a terrible example of how a law has been misinterpreted, and runs completely against the grain of what happens in a common way. In fact, if the law is strictly applied, almost all of us Indians, and certainly all those police officers and others that you mentioned, all of them would be on the wrong side of the law because you're lending to non-relatives. So this law needs to be corrected. Instead, we should encourage both partnership finance and what is called, for which a regulatory framework already exists, which is called P2P financing, person-to-person financing. Already the RBI about 5 years ago created a regulatory category called P2P NBFC, person-to-person non-bank finance company. And it's like a platform. The NBFC itself does not lend, but it brings together borrowers and lenders. One of the well-known ones is called Rangde. You can visit their website and see. But there are now almost 15, 20 P2P companies. But India should have maybe a few hundred P2P companies because that is the way that you can, sort of help small amounts. And there's a very good regulatory framework. Nobody can, in any bilateral transaction, nobody can give more than 50,000. No single lender can do more than 10 lakhs of P2P lending. No single borrower can do more than 10 lakhs of P2P borrowing. But A and B cannot do more than 50,000 with each other. So in that sense, it's also safe, and it is a risk mitigation built in. And my last point on this in this round is that all of this needs to be seriously facilitated using technology, digital technologies. We are, in a fantastic situation where we have, almost 100% computerized bank branches, 100% linked with the internet, mobile internet available almost throughout the country, over 500 million smartphones in the country. We have, a younger generation, which is irrespective of their income levels, almost all of them are becoming, digital friendly. And we have, just counting the Jandhan loans, Jandhan bank accounts, we have 41.6 crore Jandhan bank accounts. That is almost 42 crore adults have a bank account in their name, which is accessible using mobile telephony. So if we put all this infrastructure together, and because we are the global leaders in software, we can now create a lending platform or a financing platform. I don't want to use the word lending because that's only one of the ways to finance. A financing platform which is both low cost, transparent, and accountable. And in this connection, I do want to mention that in the last 2 weeks, we've been reading reports about these Chinese apps which have done some very nefarious kind of lending, giving people, enticing people with 5,000 rupee loans, and then within a few days, it becomes a few lakhs. And today I read that both the RBI and Google and Razor Pay, the payment gateways, have, they've disabled about 300 such apps on their Play stores. Now the question to me is that why did it require 2 suicides and several police complaints before this was detected? In Hyderabad alone, one place which was raided, it had done business of 21,000 crores, and it had a call center and so on, seating 70, 80 youngsters. None of them Chinese, by the way, all Indians. So it's, to blame this on the Chinese is just, I think we are not taking into account that there are lots of people from within the country who are participating in this activity. But the important point is that this represents not a failure or a misuse of technology. It represents a regulatory and supervisory failure. If 21,000 crores of financial transactions have happened out of a few bank accounts, even if it's 100 bank accounts, that's still 210 crores. I mean, does not the bank recognize that no entity can go from zero to a few crores of transactions every month without it being checked? What have we, what is all this KYC and AML, CFT regulations, which we subject ourselves to? Simple, 80-year-old retired people are being asked to do a KYC every year. And when this kind of 21,000 crore worth of scam happens, then 2 weeks after the incident, the RBI says, oh, yes, we have noticed such a thing is happening. And even Google and Razor Pay, they say that we will now remove them from our. Why is there no proper due diligence before? And why is it that when the transactions are happening, I can understand in spite of due diligence, sometimes wrong people can come in. But then these days we have online monitoring, high frequency monitoring. How is it that this kind of thing got left out? And so that it does not get repeated. But the worst thing that will happen is if due to this misuse, we say, no, let's not use technology. India's people cannot handle technology, they will be fooled, this and that. That will be the same type of mistake that Andhra Pradesh and Telangana did by banning microfinance in 2010. Those are the only two states where microfinance is still not legal. And as a result, there is enough studies to show that poor people suffered a lot. As much as 43% of them indicated a decline in food consumption, uh, uh, and 17% withdrew their children out, at least one child out of school because of lack of availability of microfinance. This was the data that was studied by two professors of Indira Gandhi Institute of Development Research, IGIDR Bombay, which is an RBI institute. So a failure in one or two cases should lead to improving supervision and not shutting down that technology or that methodology. So I'll stop with these three ideas. One was microventure, one was use of technology, and the first one was, of course, abolishing everything Professor Vaidyanathan said, except let Mudra not be a public sector bank. We have this tendency to look at Jati in a negative way only, but I think that's a westernized way. They call it social capital, so it is fine. If we call it caste, then it is not fine. वो हिंदी में बोलते हैं ना कि हम करे तो पाप, कृष्ण करे तो लीला, वो वाला बात है. So anyway,
good.
इसीलिए
Thank you.
right. So I think the point is we are stuck with some very major problems, and if we repeat our past way of thinking to solve those problems, it's not going to work. So what I detect in Professor Vaidyanathan's many statements is an impatience with the institutions of the past, both organizational institutions as well as norms, which have broken down, and to try alternative ones. That is what he's arguing for. So I'm endorsing that.
Thank you.
Sudhakar sir, as I said, and Professor Vaidyanathan also confirmed that the basic risk in microfinance, which is the individual borrower risk, is quite low. It's one of the safest asset classes. Probably the total risk levels, if there was no adverse events like a big flood or some kind of a law and order problem, or a politically organized loan waiver type of thing, then the risk is hardly more than 1.5%. 98% repayment rate is not anything brave in microfinance. That is routine. The issue is to go beyond 98. So then, why is it that every once in a while we see risk? For example, recently in Assam, there is a law that has been enacted, which basically has made it difficult for microfinance institutions to go and collect their loans. And the thing is that either due to inadequate understanding or because it is convenient, the borrowers assume that this is equal to this is the first step for a loan waiver. So,
Correct.
and as happened in Andhra Pradesh, even though the original law by the government did not require a loan waiver, but those who were in the opposition went and said, "Arey, how did this help you? You should have got a loan waiver." So when the people heard the previous chief minister saying you should have got a loan waiver, they assumed that the current chief minister will have to give a loan waiver. So it became a loan waiver, effectively. So to me, the biggest risk in microfinance is, this created political risk. And for that, all we have to do is keep educating our political leaders that if we want to help poor people through credit, then it has a certain cost. There's a cost of borrowing, there's a cost of transaction, and there's a small cost of capital which has to be serviced. And all these three together in the most efficient methodology today add up to about 18%. If tomorrow through the government, through the RBI, starts giving loans to MFIs at 4%, this cost can be brought down to 12%. The fact is, most MFIs are NBFCs and they borrow from banks and they themselves get the money at about 10, 11%. You know, so the question is, the it's a very interesting situation where it is not a single MFI which can do this job. It is their industry association, MFIN and Sadhan, jointly with intellectuals like Professor Vaidyanathan, Kuldeep Bhai and others, to approach decision makers and to explain to them that what they're doing is not in the long run interest of smaller people, and therefore microfinance should be regulated, but it should not be strangulated. In terms of advice to MFIs, I would say that you just have to bide your time and just cool down. The last thing you should do is engage in coercive recovery. So the investor should not put pressure on the MFI. The MFI CEO should not put pressure on the staff, and the staff in turn should not put pressure on their field staff. The branch staff should not put pressure on the field staff, and field staff should not put pressure on the borrower. This was what got magnified at every step. It's like sometimes when you want a car at 7 a.m., you tell your PA 7 a.m., he tells the travel agency 6:30, the travel agency wala tells the driver 6 o'clock, the driver turns up at 5:30. So same thing, that magnification happened. So the last thing an MFI should do is get impatient or worry about its future and go and do coercive lending. That will be end of story for them as well as for the sector. Just sit quietly and let the sanity return. And then you will find that after a period of time, with some delay, some delinquency, the loan repayment will start happening. Prashant Singh ji, you're right. If it is a non-profit, then there are very few who will be willing to invest. So most microfinance institutions since 2005 are for-profit NBFCs. And so they start with, money from friends and families, as Professor Vaidyanathan didn't use the word 3F, but normally most initial funding is through 3F: friends, families, and fools. So, fools means basically those who have an idealistic view of the idea, and or they expect some exceptional returns. They come in, but that is only at the early stage. After the first 2-3 crores of lending, when the track record gets built, then the regular investors, there are a few hundred investing institutions, both impact funds as well as regular private equity funds, which invest equity in microfinance. You can look up the website of any of the major MFIs and look up who has invested in them. You'll find that you'll find most of the names there. And some are Indian, some are global. Indian are people like Globe Capital and Avishkar and so forth. Global are things like Unitas and many of these foundations and so forth. And after that, because of RBI regulations, both for banks and NBFCs, as the total loan size of the institution goes up, it has to maintain what is called capital adequacy. For MFIs, it's roughly 15%. So if you reached 100 crore loan size, you'll have to have 15 crore of capital minimum. If tomorrow you want to go from 100 crores to 200 crores, the lending money maybe you'll borrow from a bank, but to underwrite that, the risk in that, you have to have risk capital 15%. So that additional 15 crores that you need, that will have to come from investors. Some of it may come from your retained profits, but you can't bring as much retained profits as is required. So it's a fairly well-established path today, from start to growth and all. And of course, some MFIs have become small finance banks. So in their case, they can also raise deposits on the liability side. But that's a different kind of finance. Pankaj ji, that is all that microfinance institutions do. They are only doing inclusive growth. In fact, that's what I started by explaining, that if you want inclusive growth, then you have to have much more microfinance.
Very correct.
And within microfinance, of course, as you know, a significantly large portion of the loans goes to women, not just in name, but actually, to help them start their own home-based or street-based enterprises. So there is no problem about inclusivity. The another inclusivity is geographical. MFIs penetrate much more deeply into rural areas and small towns than any banks, even RRBs do. And the third type of inclusivity, which is missing in microfinance today, is that 80% of microfinance today is still going for trading type of activities. Relatively little for either agriculture and allied activities, and relatively little for manufacturing type of activities. So that sectoral diversification is something that MFIs have to learn, and for that they need to change their products and some of their staff policies also. Lakshmi, there is an exclusive legal framework. It is in 2013. After the AP crisis in 2011, there was a committee, Malegaon committee was established by RBI, and it gave its report in 2012, and RBI enacted legal framework. After that time, there's the whole category called NBFC MFIs, and there's a whole set of frameworks for them, both on the prudential side, things like capital adequacy, liquidity, earnings, all of that, and on the customer relation side, which is code of conduct, loan size, smallest, what is the incremental loan, to how to prevent over-indebtedness, so not more than 2 loans per borrower, total loan size together not exceeding 1,25,000. All those are part of that comprehensive regulation. You can see it on the RBI website. It is not really the RBI's job to give money to banks. RBI is a lender of last resort.
Correct.
Banks have to raise money from retail depositors. So the RBI opened up a method for MFIs to do that by saying those MFIs which have done well and which fulfill the basic licensing criteria, they can apply for being a small finance bank. Once they become an SFB, then they can raise deposits and lend out of that. So that has been, I think, a good, breakthrough for the better run MFIs. In fact, one of the largest MFIs, which was Bandhan, also got a universal bank license. So it is now a regular universal bank. But if you look at Bandhan's borrower profile, there's still a large number of microfinance borrowers, almost 1 crore microfinance borrowers. So I think RBI, in terms of policy, has been broadly supportive. But I'm not in favor of RBI giving loans to MFIs. That's not the regulator's job. Well, taking from your comment that you repeated from about North Block, South Block, from Palkiwala ji. So I'm saying, it is time India went beyond this left block, right block. You also see North Block and left and South Block as, if you see it as left and right. Problem is we are blocked on both sides. Isliye straight jana. So let's go down the central vista, which is inclusive growth, but self-reliant inclusive growth, which means loan-based and equity-based. And it has to be largely in the non-farm sector, and it has to be largely in small towns. It cannot be that, khadi and village industry type of rural industry. And it cannot be agriculture, because that is already over saturated with people. It has to be non-farm sector, but it should not be metropolitan non-farm employment. It should be small town. हमारे हर एक जिले को समर्थ जिला बनाना है कुलदीप भाई. अगर हमारे स्मार्ट सिटी की जगह जिला समर्थ हो गया ना, तो सारी समस्याएं भारत की 700 जगह में सुलझ जाएंगी.